About where you see Bitcoin hitting at the end of the year and in a year from now when we're back at this conference?
Well, I think Bitcoin's going to continue to grind up. I think the volatility is coming off of it as the industry becomes more structured with more derivatives and more ways to hedge it. Our expectation right now is end of the year, it should be about $150,000. And that's the consensus of the equity analysts that cover our company and the Bitcoin industry right now. I don't know why it won't grind up to $1 million a coin over the next 4 to 8 years. I would think not less than 4, not more than 8. And of course, my long-term forecast is it goes up about 30% a year for the next 20 years, and we're headed toward $20 million Bitcoin.
Welcome back to the channel. You just saw in that clip, that was Michael Saylor talking about he believes Bitcoin is going to go into $150,000 by the end of the year. And I don't know, it makes you think that Saylor watches our videos because we put out a Bitcoin price model in January where we thought Bitcoin is going to be going to 154K by the end of this year. But I have another clip of Saylor at the end of the video, so make sure to stay tuned for that. We're going to go ahead and get into some updates here in the market, get into strategy, get into some Bitcoin updates, so make sure to stay tuned. And the first thing we're going to cover here today is the Fed. We had the FOMC meeting today. We had a 25 basis point cut. So as you can see, here's the summary. The Fed cut rates by 25 basis points. Most of the members wanted 25 basis points. There were 2 members, one who wanted a 50 basis points, and the other one who wanted no cut at all. And then the Fed says it will stop shrinking its balance sheet on December 1st, which is good. That is quantitative tightening that we've had. The Fed been basically selling off assets on their balance sheet that we've been seeing over the past couple of years. It's finally coming to an end. That's going to be good for risk assets. The Fed says inflation has moved up and remains somewhat elevated. That's something we've seen, inflation at around 3% year over year with CPI. And then Fed says downside risks to employment have risen. So that is the main concern right now, is unemployment levels. If that goes up, that could definitely send us into some type of unemployment recession. That's something that we definitely have to watch pretty closely. But as you can see right here, here's the Fed's balance sheet, the total assets. As you can see, back in 2020, they started to do a lot of quantitative easing, and that sent the market into a bull run into 2021. Then we've gotten quantitative tightening over the past couple of years, and Jerome Powell says, hey, we're going to stop selling those assets on the balance sheet. So it's going to be steady, and potentially that could get back to quantitative easing in the future. So that's something we have to pay attention for. But this is actually very bullish that he said that they will stop selling assets off the balance sheet. That's basically an end to quantitative tightening. And also at that meeting, what we got is that Jerome Powell is saying, hey, the 25 basis point for the December meeting, that is not something that should be priced in as of yet. And the market reacted. The S&P went down after that. QQQ is down a little bit. And right now what the market is pricing in is around a 63% chance of another 25 basis point cut and a 36% chance of no cut at all for the December meeting. This was down from around 90% earlier in the day. So we could see the December meeting where we get no potential rate cut coming December. So that's something to watch out for. And also, one of the biggest risks to the market is the jobs right now. If we go into an unemployment recession, that's not going to be good for Bitcoin. It's not going to be good for strategy, because consumers, everyday investors, retailers, not going to have money to buy investments. And what we've seen here recently, this is on layoffs, FYI, in the tech sector. In October, layoffs have been going up in the United States, around 18,000 layoffs just in October. And also we've seen here are some recent layoff announcements. UPS with 48,000, Amazon with 30,000, Intel with 24,000, Nestle with 16,000, and Accenture with 11,000. And as you go down this list, these are thousands and thousands of people who are being laid off. And the job market isn't really strong right now, so it's going to be hard for these people to come back into the market to get a new job, especially with AI and how all these companies are not looking to, increase headcount, and they're looking to slow headcount because of everything that AI brings. This is also something we're seeing in that PMI number. PMI has been below 50, which means companies are not expanding, they're contracting right now. And we're seeing that in these numbers right here. So what the risk is here, we're only really seeing the ADP job numbers. We're not getting the government job numbers that come out every month because the government is shut down. So whenever the government decides to open back up and we get those job numbers come out and they come out bad, and it looks like we've been losing jobs month over month, that could cause a lot of fear in the market, and it could cause a recession where we start to see companies lay off more and more employees. And if we start to see more and more layoffs like we've seen here recently, that's definitely not going to be good for any market, Bitcoin included. But that is not financial advice. That is just my opinion. I believe the job market is something we have to pay attention to very closely. And it doesn't help that inflation doesn't look like it's coming down. It looks like it has been elevated or going up since April. So that doesn't help as well. That doesn't give the Fed a lot of confidence to lower interest rates. So that is something to pay attention to. But let's go ahead and get back into strategy here. So talked about this a couple of days ago, but strategy got a credit rating of a B- by the S&P 500. And as you can see right here, this just shows you that the strategy, the credit rating right now does not make sense. They don't really know how to rate this vehicle, how to rate this product right now. If you look at JetBlue, which has the same rating, and you can kind of just go down through this list and start to realize like, okay, in the future, strategy will be understood more, and this credit rating will go up. And as that credit rating goes up, it's going to lead to more insurance companies and pension funds to be able to invest in some of strategy's perpetual products that they have out there. So we are very, very early in the credit rating cycle for strategy. This is the first Bitcoin treasury company to be rated ever. So I think the B- rating, a lot of people are looking at it and saying like, that's a bad rating, but I think it's just a good start to higher ratings to come in the future. And you guys can pause the screen and look at all the differences here between strategy and JetBlue. And then also here, analysts see a 7% chance for MicroStrategy to join the S&P 500 if Q3 confirms a $3.8 billion gain. So we get strategy's earnings call tomorrow, so we'll definitely see the numbers tomorrow, but it's looking like strategy will be included in the S&P very soon. And right now, where they're rated in the top market cap companies in the US, they're coming in at 134, down 7 spots today, around an $80 billion market cap right there. So taking into consideration if strategy is included in the S&P in December, as they are falling down this list or as they're going up this list, their S&P allocation is going to be higher or lower based on where they're rated in the S&P market cap companies. So if they go up the list, their allocation is going to be higher, and that means that the S&P funds will have to buy more shares of strategy, and if it's lower, obviously they're going to have to buy less shares. So something to take into consideration there. But also to look at the crypto market right now, we are definitely in fear, a lot of fear in the market. This could be a potential indicator to buy the dip in Bitcoin and strategy. And you're looking at Swiss National Bank. They hold around $213 million worth of MSTR. That is definitely good to see. In terms of Bitcoin, Germany's second largest party, AfD, introduced a motion to build a Bitcoin reserve. This is after last year. Germany sold off all their Bitcoin, which was a huge mistake. They sold off all their Bitcoin around $40,000 to $50,000, and now they're looking to buy back at $110,000 potentially if this is passed. But Germany shouldn't have sold their Bitcoin in the first place. And then if we look at the Bitcoin ETF flows from yesterday, around $202 million on Tuesday, 150 on Monday. So the Bitcoin ETFs are starting to get more confident. And we're starting to see dollars start to pile back into Bitcoin through the Bitcoin ETFs. But one thing to watch here in the short term is going to be really interesting to see how the market reacts to the FOMC meeting and the 25 basis point cut. If we're going to see more inflows or if we're going to start to see outflows of the Bitcoin ETF this week. It's something that we'll be watching out for. But that's really all I had for today's video. I hope you found some value in today's video. If you did, make sure to hit that like button. We have videos coming out every single day. Make sure to hit the subscribe button, hit the bell notification to get updated on all those videos. I have a clip here of Saylor that I want to share with you guys. But I'm out. My name is Aaron from Bitcoin Bros. I'll see you guys in the next one.
And talk to me about the nuance of being a tax-free dividend yield that you're looking at here.
Yeah, well, the beauty of a digital credit instrument that's issued by a treasury company like ours is we fund the dividends by selling equity. And when you fund the dividends by selling equity, then the dividend becomes a return of capital. And as a return of capital, it means there is no tax on the dividend. So when you're getting 10%, you're getting 10% cash dividend yield. And what happens is your basis in the instrument is reduced by the cash dividend. So if you buy a $100 share and you get a $10 dividend a year, then your basis goes to 90, and then after the second year it goes to 80, and after the third year it goes to 70. But for the next 10 years, you have no tax. You don't pay qualified dividend. You don't pay long-term capital gains tax. You don't pay ordinary income. You just get a return of capital. So that means the tax equivalent yield of one of these instruments is like 16 to 20%. It's like a bank that pays you 20% interest. And so that's a very special thing. It's because we're built on Bitcoin. A treasury company built on Bitcoin is the most tax efficient fixed income generator in the world.